A little bit of a rocky day on Tuesday. Right the ship on Wednesday, kind of. Inside day on Thursday. And we got a jobs number at 8:30 to shake things up. Some good technical setups to look at. We got some ratings changes. We're going to rant about some ratings and the effects that some banks have and some banks don't. Worried about save. Well, will someone come and save it? Cameron Dawson, 8:35, jam-packed show today on PreMarket Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Uh-oh, Joel. Can you guys hear Joel? Dennis?
Nope, but he's not on mute, so this is weird. This is a new one.
I don't think Joel can hear us either.
He's not on mute.
Oh, he is. He's
not
going.
on mute now.
He was going.
This is the weirdest thing. He was working fine, and now he's not on. Now he's on mute. He's lost. I don't think he can hear us. He's in his own world. It's the Joel world, and he's the only one in there right now. This is so interesting. I know what he's talking about is really interesting too.
He was going. He was very animated too. I feel bad because I think he was giving us some really good insights.
He was.
He's still going.
Okay, read the lips, folks. Read the lips. Who can read the lips? I know his headset is muted now. It wasn't muted originally though. So he's got a few issues here. He's come unplugged or something. Joel, are you back?
Yeah.
No. Oh.
It was not mute. It was, there's
What
a little
was it?
short. I don't know.
A short.
It looked like you were saying some really good stuff though, Joel. We missed all of
did
it.
you get
interested.
nothing?
We were trying to
Nothing.
read the lips. It was
You got nothing?
thinking about it says you were
Nothing.
talking sports. So they didn't care. He says we were talking
You didn't
sports.
get that
So
intro?
No, we got the intro.
you got the intro. The intro is
When we
good.
came back with the charts,
Oh,
there was
man.
nothing.
That's
hope
okay,
I don't
though.
have to buy another damn headset.
These headsets, man. They
God
kick
darn it.
every time. Okay.
Oh, all right.
I mean, people
We're
in
all
the chat,
lost now. The show's
Peop-
off the rails.
Oh,
Bring
let's
us
cancel
back
the
in.
show.
people in
Let's
the chat,
cancel the
people in the
show.
chat are talking about it. It was a great night for sports. I mean, the Mets game and then the Falcons game back to back, both thrillers there right at the end. People are talking about. Did you guys see the finish in the Mets Brewers game last night?
No.
Tell us about it.
So it was elimination game for both teams. Game 3
Yeah.
of the 3-game series. The Mets were down 2-0 going into the top of the 9th. Rallied. Pete Alonso hit a 3-run home run to go up 3-2. This is like in a moment like that, I mean, Dennis, it's like if a hockey team, blows a lead in game 7 in the last minute of the third period. Part of it's like, oh my God, this is amazing for the team. And then you just think about how bad it sucks for the other team.
Oh, yeah.
And I mean, the guy who was pitching for the Brewers, Devin Williams, who's one of the better relievers in the league. He's from St. Louis. I don't know him personally, but like, I went to college with his girlfriend and stuff. And all I could think about was I was just like, man, he probably because he's like single-handedly going to be blamed for this loss for a whole city. Now their whole season is over. And like, I could only think about it from that angle and not like how amazing this was for Mets fans. So either way, just thrilling games again in both baseball and the NFL last night.
Okay. They're going nuts. The chat's going nuts. There's a lot of people who don't like sports. I'm with you, Ryan. I'm like, who doesn't like sports? There's two things I like: sports and stocks. But it was, Tigers. We're having the Tigers, so they're going to be coming up here.
Joel wasn't here for the Tigers talk yesterday.
I know. We can't do it though. We can't talk any more sports, or everybody's going to leave. I just saw 5 people leave the room, so we got to go right to the stocks. Joel, no more sports talk. It's
I didn't do
exciting.
any.
Baseball
Yeah, you
playoffs
can't
are always
blame
fun.
me. I wasn't here yesterday, and I haven't mentioned any yet today.
Well, we did. Me and AB went on for like 10 minutes though with the Tigers. So
no, not that long. All right. Well, Joel, going back, let's start over. Go to the S&P 500. Go to the, go through what we went through at the beginning when we couldn't hear you because
recut. Starting the whole show over. You didn't hear the sports talk. You didn't hear Joel's mute. Take two.
Okay, S&Ps are trading up 13 and a quarter handles, right? You guys heard the intro, so you know about the inside day yesterday. The buck is had a 4-day rally, down 15 cents, 101.59. TLT doesn't think rates are going down. Jim Tassoni, I think, is still short this. Contrary to what everyone's thinking here, crude's ripping up a buck 02, 74.73. What a rally. Gold backing off the all-time high, flat at 26.78. Silver, that's in the 32 handle, down 7 cents, 32.39. And Bitcoin just holding steady at 61,630. That's all you guys miss. Nothing special. But where are we going to start? I guess we got some low-price stocks that are having some trouble. So why don't we get those out of the way?
Yeah.
All right, let's go to Save, ticker Save, of course, Spirit Airlines. After the merger with JetBlue fell through, there were a lot of questions about if this company would be able to survive. Then we got headlines yesterday. This came after the close that the Spirit Airlines considering bankruptcy filing, coming from the Wall Street Journal, received a sell rating from TD Cohen yesterday morning before that. So either way, I mean, the stock was already trading down during the day. Then after hours, you get the news that they're filing for bankruptcy or considering filing for bankruptcy. Sorry, I don't want to.
Not official yet.
I don't want to, be the one that, people come back and say, oh, you said it wrong. Considering filing for bankruptcy. I'm not sure, obviously the market reaction is telling you all you need to know. Down 34% this morning, 75 cents. And it looks like Save is looking for a lifeline.
Yeah, and the DOJ didn't throw them a lifeline. They threw them a death sentence. So we knew the merger between JetBlue and Save was a merger more out of necessity than trying to kill competition. But the DOJ, with their just killing all deals, now this blood, if Spirit goes down, this blood is on the DOJ's hands because they could have merged with JetBlue, cut some costs, save the airline. No, you can't merge. It's anti-competitive. Well, you know what's anti-competitive? Is actually allowing companies to go bankrupt. And this is on the DOJ 100%. We talked about this when they blocked the merger. I said, when they blocked the merger, that this is going to be tough for Spirit Air to survive. So here it is, 8 months, 10 months later, and looking like they're teetering on bankruptcy now. Thank the DOJ for this. Thank the DOJ that you're going to have one less airline. You know who this is good for? All the other airlines, because there's now less competition. Thank you, DOJ. LUV, trading higher. AAL, trading higher. Delta, trading higher. JetBlue themselves, trading up 4%. They were the ones that were going to acquire the merger. So, I mean, what obviously the DOJ was trying to do is keep one more airline there for more competition, and the exact opposite has occurred. So this blood on the DOJ hands. They just the deal killers, man. They kill them all. This administration, this DOJ that they've got in there right now is the toughest one I've ever seen. They don't like stuff going through. I mean, the iRobot deal was ridiculous too. That's probably going to be the next one, that they've killed off. So no, it's a rant, but I'm just, it was writing was on the wall here. I don't know what they were thinking.
It's a rumor, right? Nothing. I mean, it's in print. The street's reacting to it. At this point, I mean, since JetBlue already threw them a lifeline, I mean, I don't know what the possibilities are here. Down
lifeline
70.
blocked. Let them sink. Yeah. That's what the DOJ said.
Okay. I mean, if you think this is a zero, which I have no way of telling, well, you can make a $1.49 shorting it here. But if any kind of positive news comes out of this, then your risk. If you want to talk risk reward, you think there's a $1.49 on the board here. Well, if you want to risk up, if you want to risk a $1.50 or $2, but it's just not something that's in my repertoire to try and catch that extra $1.49. I imagine that they'll come out with some kind of news or some kind of refute before they actually go down. But it's sad to see. I mean, you're right, less competition. And if there was a stock DOJ, is there a stock DOJ? I would be shorting it. No, there's not.
Yeah. Okay. Anyways, I mean, I get it. They're in there for a reason. Obviously, there is some, but I just think they've just overstepped on so many of these mergers that they're blocking.
Do you
This is why the
guys?
U.S. Steel. You think the U.S. Steel even has a chance?
Oh
I
yeah.
mean,
Oh, I think U.S. Steel's going through for sure.
you think the U.S. Steel merger is going to go through? They're going to
Yeah.
allow Japan or with this Japanese company that's taking them over. I think it is.
Yeah,
They're going to allow a Japanese company to take over U.S.
Nippon
Steel.
Steel.
They're going to allow. Yeah, but I didn't know where they were. They're Japan, right? Yeah, Nippon.
Yeah.
You think that was sarcasm? I think from AB, but if you think it's going through,
No,
$34
I really do think it's going.
Well, you
through.
should be down. Why do you think that? Why?
Because it's an $8 billion company. If there's the only reason for them to not let it go through is just because the name is U.S. Steel, and I think like
That's a big reason.
Well, but right now you're dealing with there's political stuff at hand right now going on where, they don't want. Trump has come out and said, I wouldn't let US Steel become Japanese Steel. And then Biden comes out and says, we're not going to let it happen either because
So
they don't want it to happen before the election. But I think after the election, when the Department of Justice is looking at it and stuff, they'll be like, this is an $8 billion company. It's better for the company long term. Dennis, when I went and saw the CEO of X speak, he explained it in a way that I was like, oh yeah, there's no way this deal isn't going through eventually.
Oh, you should buy it then, AB, because it's $52, I think, is the takeout price. So there is huge upside if you think this deal is going through, because the market is clearly saying the deal is unlikely to go through. The market, if we could see odds right now, you could see it just through the stock price. It's like 80% not going through. So that's what the market thinks. So they're taking the exact opposite. Like in your market cap, argument here, iRobot was a $1 billion deal for Amazon, and they blocked that. $1 billion deal for Amazon, the behemoth that Amazon is. Now iRobot's a $260 million company and probably teetering on, well, we've seen what's happened to the stock. I won't say it's teetering on anything, but it's come down significantly here. So I don't think the DOJ gives a care at all that it's a small merger. I don't think they even look at that. I think they look at the name, United States Steel, and they say no way. Both administrations are against it. Even afterwards, that's not something they want on the record, either of them. So I think there's very little chance. I will take the opposite bet here all day. I think there's very little chance that they allow this merger to go through with Nippon Steel. I do think Cleveland-Cliffs could come to the rescue, and that's why it's trading in the mid-30s. I think without what Cleveland-Cliffs CEO said, a month ago, because he was on CNBC and said, we're still interested in the 30s. That's when the stock popped up to 29 to 35. So I think it sits here that arbitragers are saying, well, it's probably worth in the low 30s because Cleveland-Cliffs gets it, but we have that outside chance that this deal could go through. So that's why it's up here at 35.
And again, I don't think it'll go through before the election or anything like that. I just think eventually, as they're looking at it, hopefully somewhat objectively, they'd be, without like the political influence again of both administrations saying they're against it. I just don't see why. And again, I'm going from what the U.S. Steel CEO was saying.
Obviously, he's going to say like, oh yeah, there's nothing here. Like what's he saying? Obviously, if I watched what the U.S. Steel guy said too, I'd be influenced by it. I think you're wrong, AB. This is why we have a market. And this is why I love it when we have conflicting opinions on the show. That's what it's all about, a bull and a bear. I'm not saying I'm shorting it because I do think Cleveland-Cliffs is there, but I think there's almost zero chance that they allow Nippon Steel to buy this company.
All right, well, let's move from Japan to China, because yesterday we talked about Chinese stocks selling off a little bit. It looked like investors were just taking some profits from the recent rally. Oh, wait, Joel, you want to go to Rivian first? Oh, Joel's on mute now.
Joel has got problems all over. Okay, forget Joel for the day. He's got problems. You're back on mute, Joel. I don't know what you're doing. You're a mess, Joel. You go away for one day, and it's just you can't take one day off. Not when you're as old as Joel. You take one day off, it's like taking a year off.
All right, we'll go to Rivian first, then China stock. So Rivian shares are trading lower after the company lowered its annual production guidance due to supply shortage of shared component on the R1 and RCV platforms. So revises annual production guidance to be 47 to 49,000 vehicles. It was 57,000 vehicles prior. So again, they're basically lowering their production target by about 8,000 to 10,000 vehicles here. Not good news for Rivian. We talked about this stock a little bit yesterday, down 8% before we opened the market.
$10 was support, multiple lows in that area. So I'll just say, technically, I don't know about their supply chain issues or whatever, but you got to look at this area from, just all these lows at the $10. So if people are saying, hey, this is a temporary thing, we'll catch a bid, hold $10 and maybe get up to the lower part of yesterday's range. But that would be at 10.44. That's the technical comments I have on that.
Joel's upset here. Sorry, Joe. I'll apologize to Joe. I was mean to him. 8.26. I don't know. Like, again, we talked about this one yesterday. Is there a place where Rivian, this is a logical bounce area? Well, now we are actually at the bounce area. We talked about 10 yesterday when you were away, Joel, being a bounce area. It's here. It needs to bounce out of here. You don't want to see this continue to leak, but you never want to hear production cuts for any reason.
All right, let's keep it ticking. Let's go over to some of the China names real quick here, because again, we talked about this sector yesterday.
They go up 5% or down 5% every day.
Yeah. So yesterday we had a little bit of a sell-off where it looked like, investors were just taking some profits after the recent rally in the Chinese names. Today, though, it's the exact opposite. The names are trading back higher. Baba is ripping once again. And I don't think there's really any specific news here. I think it's just, fluctuations in the market. Yeah. It's, of course, the Golden Week is going on. So the actual market in China is closed, but the Hong Kong market is open. Baba up another 3%. You look at PDD up again, JD up again. So we know this sector is hot right now. And when a sector is hot, that doesn't mean you can't have days like yesterday where there are small dips, but clearly the trend here is remaining a positive one for these Chinese names.
Nice rebound in these. After you have a big move, up, and then you have a check down day like you did yesterday. I think a lot of things are lining up technically. If you look at these stocks, just look at that high from Wednesday. Baba's high was 116.57. You traded over 117. So make sure you hold this level in, because a lot of people are like, whew, I sat out yesterday. We're back at the high of the move. This is my chance to get out. So see if they take that opportunity. Baidu, the same, not quite up there. Baidu had the highs at 115, over 115. It's not quite there yet. And then you could just see with JD, boom, over 46. That's a 46.82. So you got a good reference point from the highs on on Wednesday for all these Chinese stocks. FXI kind of fits in there too. You had a high on Wednesday at 36.55. You're not quite there. No, 35.55. You're right there right now, testing the highs of the moves on all the Chinese stocks.
I'm having the toughest time separating the trader from the investor on all this stuff because, I look at my Baidu and it was $85 1, 2, 3, 4, 5, 6, 7, 8 days ago. And now it's 112. I look at my Baba and it was 85. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading. It goes 116. I'm having so much trouble not taking the profits on this stuff. Like if these were on for trades, I would sell them. But they're not. They're in the long-term portfolio, and I'm trying to say, wow, the stories maybe changed here. The valuations are still attractive, but it's hard not to take 30% gainers in a week and a half. And this is the market that we're in. Like there has been, multiple times where we've seen stocks go up 20, 30% in this market, and then they leak it back. Like Micron, same thing. Twice I've done it with Micron now, where I bought this thing at 87. I take it all the way up to 111, didn't sell a share because I'm like, oh, it's long term. Comes all the way back down to 87, back up to 114. I did sell a little piece, but I've still got a chunk of it. And now it's given a lot of it back again. It's like this market is the market where you are punished for long-term thinking. You are punished for holding on and saying, it's going to, turn around, it's going to go, and this is going to be. You were very much rewarded for taking gains and then just maybe even getting the chance to reload. I mean, same things happened with me with Tesla. I took that from 180 to 260, back to 180, back to 260, and now it's leaking again. And I just keep thinking like, man, if I was trading this crap, which I do in my trading portfolio, I'd be way outperforming my long-term investing. But again, I'm trying to separate it. It's a hard thing. You guys can help me with this too. Two separate accounts, but it's hard when you're looking at
Dennis,
these
take a
stocks every
small
day to
portion, and
separate it.
you've done this before. Take a small portion, and try and track it in Tesla for
I don't need to
6
track it.
months.
I can clearly see that trading is winning. You know how I see trading is winning continuously? You know, and Spinner's brought this point up to me before, is my trading account, the 24-hour account that I just like get in stocks, you know, the trending, you know, and I don't like to hold them, you know, intraday, but I hold overnight and I do all the other things. That account always outperforms my long-term investing account. Always, almost always. You know, maybe there's a year or two where, you know, we were really ripping like 2020 maybe or something where the investing portfolio was just exploding because everything was just going up so much. But the trading almost always seems to outperform the investing. And the reason for that is that I'm sitting here every day and I am a market timer and I can time this stuff. And part of me just thinks, why don't I just screw the long-term investing account, sell all the stuff out of the long-term and just trade? You know, because you could be picking up Tesla 180, take it to 250, reload at 180, sell it at 250.
Because you wouldn't have the same feel.
Maybe that's the way to do it.
Because you wouldn't have the same feel if you did that. Because you weren't like you're in there. The reason that you feel it is because you're in there. You're seeing the order flow. You're following the news. So
I'm saying that's my
overall,
edge. I'm saying I probably would do better to just not even worry about long-term investing and just trade everything, Joel. So yeah, because I'm sitting here, I have a huge edge over your average bear because I'm sitting here and constantly, you know, in the zone. I mean, you take one day off, Joel. You feel that probably today. Like you got to like you know, what happened yesterday.
refocus.
You feel it. If I take, this is why I hardly take any time off. If I take 2 days off, it feels like I took 2 months off. You're just so out of the loop. But when I'm in the zone and I'm trading every day and trading after hours and even trading Sunday night now because Robinhood and IB offer it. You know, again, my wife doesn't love that. Kids don't love it always either. And I'm not like in here continuously, but just getting a feel for it. I'm so much more in the zone. And that's why, you know, you can make good calls and you can do things. So, you know, part of me just asking the traders, maybe I should just stop long-term investing and just trade it all. Because I've watched, you know, the Microns and the Babas, and I don't want it to happen to my China stocks. I'm like, I see the Baba up 30%.
Sell part of it. So I mean, you've
Well,
sold.
I did sell a little bit of Baidu. I haven't sold any Baba. But again, then, you know, like, but you're trying to separate and grow wealth long-term, Warren Buffett approach. And I had some success doing that. You know, I had like my MasterCards and my Apples and my Googles that I made a lot of money on doing that. But the difference was back then I was bright trading prop. So I had like, you know, bright trading money. So I had basically, you know, as much money as I wanted to trade with for the most part, obviously limited to a certain extent, where now I'm actually trading my own money. So I can just put more money in probably in my account and maybe trade more. So it's a difficult thing. And I just think, you know, asking the chat this question too, trading versus investing, you know, folks, because a lot of you guys are active traders in there. What do you guys think does better? Is like people say, don't try to do market timing. Obviously, we do well market timing on this show. I'm just saying maybe I shouldn't do any long-term investing at all. Maybe I should just trade everything. That's the question of the chat. I've contemplated that.
Well, I think, Dennis, you're kind of an exception to the rule, not the
For
rule
sure.
itself, because I think for 99% of people, when people try to day trade, they lose money. And when they invest long-term, their portfolios go up. But yeah, I mean, if you have that track record and you can look at your returns in both portfolios and one's doing better than the other, then maybe it would make sense to. I mean, it's like if
I think you're comfortable, Dennis, at your level that you're trading at. So if you put, let's say you doubled your trading account and then tried to trade double. I mean, you trade after hours, you know, there's limited to the capital you could do. So it's a two-edged sword, but we got 5 minutes before the jobs number.
Yeah.
We
10.
really haven't.
Oh, no, 5. You're right.
Yeah, 5. So let's just go, you know, we're not the macro experts or anything here, but this TLT chart, I mean, what's that telling you? I mean, take a look at that.
Jim Tassoni is what it's telling you. Jim Tassoni on this show 3 weeks ago and saying he's short TLT We talk to Jim on a regular basis. He's still short TLT. He's got it on long term. And what a call by Jim Tassoni, because he can say, oh, it's went down 3-4%. This is a huge move for bonds. Like when you're looking at, US 20-year treasury, that's a fantastic call. TLT down from 101. I think it was like 100, 101 when he was talking about it. And he said, don't kid yourself. In an environment where they're raising or lowering short-term rates, you can actually still see long-term rates go higher. And it was an eye-opener for me because I didn't consider that. And then he gave such a good case for it that, you know what? And he's actually being proven correct right now. Long-term rates are going higher. Like getting back to normalizing the yield curve really is what it is. But fantastic call so far. Obviously, it's early here, but we'll give Jim some props. He was on here 2 weeks ago. Great call.
And didn't Stanley hop in on that? Stanley Druckenmiller? Did you guys discuss that at all?
I don't know. Maybe.
I think Stanley took like a 15 to 20% position. I don't know if it's of his whole portfolio. Don't quote me on that. But I mean, man, it is. It's normalization of the yield curve. Even though I've been saying, oh, they shouldn't lower rates, shouldn't lower. We need stability. Maybe that's what you're going to see now. That the shorter term rates, come to help the economy. But the longer, that longer for better on the long end. I don't know, but we'll see. Do you have any of the preview numbers here for the jobs report today? Go ahead. Why don't you give us those?
So we are looking. The forecast is for 150,000 non-farm payrolls. The expectation is for unemployment rate to remain the same here at 4.2%. So that's what we got last month. Expected to stay steady there at 4.2%. U.S. hourly wages are expected to grow by 0.3%. That's down 0.1% from 0.4%. And the hourly wages growth is, pretty important in terms of inflation, especially. So that will be one to watch as well. Hourly wages year over year is expected to be at 3.8% growth. That would be the same as it was the previous month. So again, to recap, we're looking for unemployment rate to stay the same at 4.2%. That's the market expectation. 150,000 jobs added is the number we're looking for. And we'll be getting those numbers here in 3 minutes.
Why don't we do scenario analysis here? What if it comes in at 4.1?
I think the market responds favorably to that.
Oh gosh. It's so the number again, give us one more time here because I was chatting too. So it's 4, the number?
4.2. 4.2 is what it was the month before, and also what we are looking for. That is the unemployment rate.
So if it comes down to 4.1, everyone's gonna say, oh, do we need another cut? Do we need to go another half in November? Do we need to go another quarter in November? I think you want to see a hot number here. You want to see 4.3. I think you want to.
But then they'll say it's recession on the corner.
Yeah,
it's like, is your glass half full or your glass half empty, Joel?
I think the concern, the risk now that more people are worried about has moved to the economy slowing down. So I think any data that shows that the economy isn't slowing down, that it's still strong, is actually what the market will respond favorably to. I don't think, because at this point, at this point, I just don't really know how much the market, because we saw the market made new all-time highs with rates above 5%. So how much could you say the market really cares if the interest rate's at 4.5 or 4.25%?
Okay. The algos are getting a little jumpy here. They've been buying ahead of this number. It's strong. We're up 17 handles. We're right at the highs of the session. And what's really interesting is we're pressing into a double top here. So if the bulls can get this thing over 57.73, boom, boom, say hello to 5,800. I don't really see much resistance on there. On the downside, I'm going to respect the pre-market low, but I think the close is more important, and we'll just call that 57.50. So I like to see it either, if we sell off, hold 50. All right, here we go. First move is up. Second move is down. 84. They printed it. It must be a weak number, like 4.5 or something, the way they're acting, despite the 91.75.
Unemployment rate 4.1 versus 4.2 expected, 4.2 prior. So that's the exact scenario. Okay, but so hourly earnings, what was
wow. Look at the bonds. Look at the TLT on this. Man, oh man, look at the bonds getting lit up like a Christmas
Oh my
tree here.
God, the TLT. I just had to come on and say, what the hell? This is
So
nuts.
So, and again, these numbers just came out, so we got to see how the market reacts to everything. But the non-farm payrolls super hot, so 254,000 versus 147,000. We almost beat by 100,000 jobs there. But the hourly earnings for September came in at 0.4% versus 0.3%. And the reason why I think that's significant is because when you have a higher than expected hourly wage growth, a lot of economists think that leads to inflation. So if wage growth is growing faster than expected, that can lead to inflation. So that might be what the market is responding to here right now. But either way, the economy doing well, it looks like. Unemployment rate dropped from 4.2 to 4.1%. I guess those rate cuts are already working. Not actually, but that, timing-wise. Timing-wise. And then
I don't know. You got an awful mixed market here. You did get the pop off the like, hey, we're feeling good. The economy's cranking. But now they're like, well, man, half off the table, maybe not a quarter, holding steady in November. That's what the TLT is trying to tell you here. You did get the initial pop here, but you're back under. So, man, it is the Bulls got the pop. You took out the double top, not able to hold it. So, still up 20 handles on the session, but not at least for the bond. The bonds are telling you, hold off on, maybe short-term rates, but long-term rates look like going to be higher for longer here. Stocks let's just go to a couple stocks here. Let me get off this 1 minute chart here.
Sony have the call.
SPY's going up now.
That TLT moves nuts, man. It was flat. That's just a huge move.
That's such a huge move.
Such a huge move. Like, I know people say 1%, what's that? It's a TLT, man. It doesn't move like that. That is insane. I don't even know what to say. That move's just nuts.
Yeah, and I mean, this is, I think, again, you're seeing the uninversion, if you will, of the yield curve here, which I think, a lot of people expected with these rate cuts coming in, that, getting back to a more normalized environment where the long-term rates are higher than the short-term, because we had an inverted yield curve for, I want to say like over a year, at least, for a while. So either way, any other sectors reacting, Joel?
I just can't take my eyes off the TLT and the bonds.
Okay, we bounced. We bounced since that initial print. Like, we got down how low on it, Joel?
Under 95.5. We got to 95.38.
We're 40 cents on the lows, so we have bounced a bit. But holy crap! I mean, SPY is leaking here, folks. So I don't know how. This is really hot. I mean, this is really hot.
Yeah, what if the inflation? I mean, with the hourly wages going up, what about? I mean, I don't want to say inflation. I want to say stagflation. I don't want to say any of these things here, but I think the market wanted the 4.3, and we got the 4.1. So I think the rate cut, at least for what the TLT is telling us, rate cuts are not imminent for that November meeting, which just happens to be.
They're going to be a quarter, but they take 50. Got to take 50 off the table, maybe.
But I mean, the SPY's still up. What, half?
IWM's doing well with it too. It's like a mix. I think bonds aren't having this number, but bonds are usually the lie detector test. So I'd be cautious chasing the eye. I know the IWM's just absolutely rip it on this. But I'd be somewhat cautious chasing that with the TLT down like it is. Again, there's separation here, but that bond move's big.
That's spooking you, huh? Okay. All right.
I'm spooked. I'm trying to make heads or tails of it. I mean, it's tough. We were light on the so give us a number here once again, because I was trading the reaction.
So the unemployment rate went down from 4.2% to 4.1%. US hourly wages grew more than expected, so went to 0.4% versus 0.3%. And then the
non-farm payrolls.
Yeah, non-farm payrolls was a huge beat. I mean, it was like 100,000 more jobs added than what was expected. That's at least the numbers that we got so far. 254,000 non-farm payrolls for September versus 147,000 estimates. So beat by 97,000 there. And again, like I said before these numbers came out, that I think the bigger fear now in the market has been, are we moving into a recession? Is unemployment going to keep going up? So at least you're getting some data that's going against that. SPY is now up 0.56% as we head into the open. So I think overall, the market does like this number. And again, it might take 50 basis points off, but my point was, what is the difference right now, especially if you're looking at the mega cap tech stocks? If they go 50 points or 25 points, we've already seen over the last 2 years that those stocks keep going up, even with rates at 5.25%. So what's the difference between 4.25% or 4.5%? Like, I think, you know, that the difference in the quarter basis point of rates there is marginal, whereas the difference of the economy being in a recession or not is a big deal. So, you know, I don't think there'd be any reason to be bearish after this report right now, at least for today. But that's just I don't know.
Well, it's showing resilience in the economy for sure. I mean, you know, so then you've got to just consider the ramifications for that. One is, if you're thinking a recession is coming here, a number like this doesn't give you any indication of that whatsoever. So that would put you maybe why you're buying the IWM. But it doesn't make you think there's a 50 basis point cut coming at all. So like not even like remote possibility of it. So that's why the TLT gets hammered. So it's definitely like, you know, a mixed, it's not even a mixed message. The market's probably responding with what you would think. If you were worried about recession and you were holding off buying, you know, small caps stuff because of that, you're not getting that number. And then I love it that they revise the numbers.
Let's get someone else's opinion.
Like
on
the
this.
freaking revisions, you know, like, so now they're revising August numbers. I noticed there too. Like, why can't they report the right numbers? Okay, get Cameron in here, but I just went on the rant because I see they're revising August too. They revise them every month. They report and then they're like, oops, we screwed up, and then we revise, and then nobody cares about the revisions.
All right, we got Cameron Dawson, NewEdge Wealth, hanging out backstage. Let's go ahead and bring Cameron on, see what she thinks about this market and the data that we just got a few minutes ago.
All right, Cameron Dawson, Chief Investment Officer over at NewEdge Wealth. Cameron, how you doing on this Friday morning?
Good. Good to see you guys.
We got you in the NewEdge Wealth office today, so you're not on the road again. So you just heard us bantering back and forth, staring at the bond market here, but the equity's holding up well. I know you do thoughtful long-term analysis here, but what's your initial reaction here to the jobs number?
Well, we've been thinking that we've been in this world where good news is good news, bad news is bad news, full stop, which just means that a bad print, even if it means that the Fed is going to be cutting interest rates more, is not necessarily going to be received well by risk assets, given where they're priced, given where valuations are, given where earnings estimates are. But that good news, effectively what the Fed has been telling you is that they want to cut rates regardless of what the data does, as long as it doesn't mean higher inflation, which just means that if you get steady growth, if you get this resilience in the labor market, they're still talking about getting to neutral. And neutral, based on their current estimate, is a lot lower than where we stand today. Now, I think a report like this raises the point of a question of where is neutral actually, meaning that is the neutral rate further up than what is currently being forecasted, because this economy is being so resilient, to your earlier points, even with interest rates being where they are today. So it does raise this question of how deep the Fed will go this tightening cycle, this easing cycle, if we continue to see data like this.
And then, you know, Cameron, I mean, right now, are there any, I guess, specific sectors that you're looking at or, you know, have been in focus for you?
Well, we have certainly started to see this drifting lower in some of the tech leadership. And it's important to note because it's such a big part of the index. It's 30% of the S&P 500. So what we've been saying about tech is that you don't need it to be leading like it did at the beginning of the year, but you certainly can't have tech be outright weak in order for this market to continue to press higher. We do think that if you're looking at some of those classic defensive areas, mostly the utilities, that they are extremely overbought. If you look at the utility sector, it's now trading at 20% above its 200-day moving average, that 20% level, every time you see any index, whether it's utilities or the semiconductors or the technology stocks more broadly, typically is followed by weaker forward returns unless you're coming out of a major market low, which is just to say that overbought levels like this are typically signs that you're going to have some consolidation. So we're cautious at chasing some of the things like utilities, which have run a lot. We see that tech, we have to watch that very closely. And then you're starting to see this bubbling up of life in some of the unloved areas like energy. Energy has certainly seen some positive volatility in the last couple of days. However, we have to be very aware that it's been in this downtrend really since April. So energy is one of those where it's close to breaking out, and if it does, it could become a lot more interesting.
But this is kind of what we want, that this is what market participants have been clamoring for, that it's not old tech, I mean, I don't know if utilities exactly, but, talking about diversity, 30% of the S&P, I mean, is this kind of what the doctor ordered, just more of a broad-based rally than being just so concentrated in the Magnificent Seven?
Yeah, it's good to see. I think that the next slide shows that what you've seen over the course of the last quarter is this big broadening out of the market, where you have seen the number of names that are in good trend, so measured here by the percentage of names above their 50-day moving average, that has expanded. It hit a high of about 83% just a couple of days ago, saying that wherever you looked in the market, you were seeing some pretty good trends. That's a heck of a lot more resilient, of course, than what you saw in earlier in the year. If you go back to times like April and May, where yes, the market was pressing higher, but what you started to see, of course, was this really distinct narrowing of the market, where it was only just a handful of names. So we do like to see this. Of course, the other aspect is not shown here, is that the equal weight S&P 500 has been making new highs prior to the cap weighted S&P 500, which is just to say that the average stock is starting to do better. And that's probably a reflection of this backdrop of the fact that you're getting easing from a monetary perspective. You're getting a resilient economy. Usually you don't get this much easing when you have this much economic resilience. And now we're contemplating things like fiscal stimulus in the US, and also digesting now a lot of fiscal stimulus abroad, mostly coming from China.
So Cameron, right now, I mean, of course, one of the hottest sectors in the market has been semiconductors. It seems like any big move, either to the upside or the downside, has been led by the semis. Where do you think we stand here?
So I think that the semis are in a very critical spot. If they can break above the September high that they reached, then effectively maybe the consolidation period within semis is over. But if they fail to do so, if you start to see semis break below and potentially break below the lows that we saw back in early September, that would effectively be carving out a near-term downtrend. Now, I think that the other important point to note, and this is something from Jeff DeGraff over at RINMAC, who's been so spot on, back in the early summer, late spring, he started saying, hey, semiconductors have really bad seasonality starting in July. And lo and behold, look at this underperformance that we've seen. That seasonality starts to look better once we get into the later part of the fourth quarter and into next year, which is just to say that maybe we have a little bit more volatility to be had, and you start to see a rally from there. We think within the semiconductors, it's important to notice that we think we're still in a semiconductor upcycle, meaning that the cycle isn't over yet. But some of this is just simply growing into your valuations, growing into these overbought conditions that we reached at the peak in early July.
We like to talk about rotation on this show, and talk a lot about it in the markets. So you look at the fact that people are so heavily invested in the tech stocks here, right? And so now you have the valuations being stretched, right? So natural selling coming that from a fundamental standpoint. And now you have China. You have China on the move here. So it's just like, and if you think about the way these have been going in opposite directions here, I mean, could this trade people are like, oh, I'm chasing up here at 116 after it's 88, something like Alibaba, with not thinking that this thing was at 310. How you looking at China here? You know, you wanna wait for another pullback, and you got so many chances at pullbacks. Will you get another one, or is you're staying out of this one?
Yeah, I keep a book right next to my desk all the time, which is Walter Deemer's "When It Comes Time to Buy, You Won't Want to." And one of my favorite quotes from that is that the market will do whatever it takes to embarrass the most number of people, the
Mhm.
most amount of time, which is just to say, to your point, Joel, is that you saw this huge inflow into tech that has been so powerful over the last 12 months, really the last 24 months, where it's been a one direction. Tech has taken all of the inflows from a sector basis, looking at the Deutsche Bank data. And then you were seeing big outflows out of areas like China. You were seeing big outflows as well as from other sectors like energy and utilities earlier in the year. And so this snapback is as much a reflection of the ultralight positioning. And if you think about people in my seat in looking at our asset allocations, we've been really right by being underweight China for the last 17 years. Effectively, to say that, yes, you've seen these different rallies, they've all reversed themselves. The Chinese market has effectively been flat for 17 years. So we've been very well justified in having an underweight. But now what happens is that all the people in my seat have to look around and ask the question, is this time different? That also sparks the potential for a chase, this kind of melt up, or it's more than a melt, it's a boil up that happens in the trading. It doesn't mean that even if this ends up, if we look out 6 months or 12 months, ends up completely reversing itself, it doesn't mean you necessarily shouldn't participate in the short run. We've seen this historically repeat itself multiple times. 08, 2014, 2020. China stimulates, the market shoots higher, it goes up higher than a lot longer than expected, a lot further than expected. It does reverse, but these rallies are ultra powerful because there's a speculative nature about Chinese markets. So what we think is that we thought it for small caps, we think it as well for China, which is that we're here for a good time, not for a long time. We know these rallies can have a lot of legs simply because people are so underweight and weren't expecting this, and so it is an opportunity potentially for short term, but don't get married to it because certainly we have the long history of it reversing.
All right, Cameron, we're going to backtrack a little bit here. I know you mentioned, utilities a second ago being overbought here. So what has driven this run up in utilities, and where do you see us going from here? I mean, I know your chart says we're overbought. Do you think we're going to move down from here? You think we're going to move sideways, keep moving up? What's the reading here?
Yeah, well, we're calling it euphoria. This idea that the euphoria around the tech and semiconductors has morphed its way into the utilities. And you have certain utilities that have nuclear exposure, for example, really coming square into focus of people saying, look, if we're going to build out the capacity we need for AI, of course, we need incremental capacity of energy generation. The question is, does it move the needle enough on the earnings front for these companies? What we've seen is a lot of this is multiple expansion. So if you look at the average multiple for the utility sector, it's up over 30% to start the year. That's partially just kind of a return to normal. Utilities were very, very cheap to start the year. Nobody wanted to touch them. They weren't exciting. And so what's happened now is that sharply moved in the other direction. So what we have to be aware of though is that because these stocks have moved so far so fast, it would not be out of the ordinary to see a consolidation. It doesn't mean that the trend is broken. It doesn't mean that you don't see new highs after that consolidation. It's just to say if you're allocating new dollars today, you probably wouldn't chase given a reading of this magnitude of a percentage above the 200-day moving average. It's a really helpful gut check just to understand where you are versus trend, how fast you've moved. And it really, what you see is that every time you reach a level like this, it typically is followed by a little bit of consolidation. And if it's a strong trend, and if these hopes and dreams about utility power generation are true, then it'll correct back to trend. It'll be a great buying opportunity.
You never really see a story in utilities, and that's the difference maybe this year is we have this AI story attached to it all of a sudden that, we're going to need so much power for AI. Obviously, XLU, two of the top 7 components are Constellation Energy, CEG, and Vistra. That's 10% combine them both of the XLU. I mean, there's a little bit of a story here all of a sudden, with AI. is that like, it's difficult, like when you're analyzing something and the utilities are just boring. They're always just boring. They're stable, but now all of a sudden everybody's seeing them as growth. It's just hype. Are they still just, boring utilities? And this is just the 2024 AI hype, Cameron?
Yeah, the last time utilities were this sexy was back in, I think it was 2015, 2016. You were going through the process of the Clean Power Plant Act, where you were transitioning from coal into nat gas, and people were excited about renewables at the same time as there was a market adoration of low volatility. Remember that low vol stocks were the leadership in the market. You had a big ETF that got a bunch of inflows during that time. So to your point, these narratives do come and go, and I think that where it has to be proven out is in the earnings line. You have to look at those top components, the names that are supposed to benefit the most from the application of AI or from the adoption of AI. You have to see the earnings forecast start to move higher. And if you continue to see the stocks move higher, but the earnings go nowhere, that's your gut check to say this is just hype. Now, of course, there's all the positioning aspects of it. Remember, you had big outflows from utilities at the beginning of the year. So people were underweight, they were cheap. So part of it is just that, but you have to see it show up in the numbers. So we would watch the 12-month forward numbers for each of these companies really closely to make sure that they're being revised higher. It's one of the reasons why NVIDIA has been such a powerful stock. Yes, it's moved up a lot. Yes, valuations have expanded, but it's been justified by earnings. The same thing needs to happen with utilities, but to your point, they typically move pretty slowly. So they're not the most exciting stocks in the S&P.
All right, Cameron, before we let you go, I mean, we can look at all these charts. We can talk about the valuations. We can talk about the Fed. But we got to look at, how do you factor in the geopolitical situation? Number one, you see what the market's reaction was on Tuesday. And also, I mean, you got an election come up. I mean, are these things just whatever? They'll just work themselves out and you just look at the numbers? Or does it give you a slant in your analysis at all?
We like to say that markets will do what they do in spite of or despite of what goes on in Washington. And you can see that by looking at the long-term history, whether you have different mixtures of Congress and executive branch, that markets have been able to do what they do kind of regardless of the uncertainty. Now, this is a very interesting election given that we're now about a month away and we have effectively even odds between the two parties. We think the best case scenario for markets is stalemate, meaning that you have a split Congress. The worst case scenario for markets is a sweep in either direction, meaning that if you get a Democratic sweep or a Republican sweep, the combination of the sweeps is that you would get two things, which are really interesting. You'd get higher deficits, but also you would get potentially growth dampening policies. So you would think about things like tariffs, immigration, higher corporate taxes, all of things that could dampen growth at the same time as you're getting the higher spending or lower taxes in other areas, which would exacerbate deficits. What does that translate to? A lot of volatility within the bond market. We do see concern that if you do see a sweep in either direction, that bonds start to look around and say, wait a second, these deficit projections don't look great. Remember what happened in the third quarter of last year. You saw the 10-year yield rise almost 150 basis points in very short order because of concerns about Treasury funding. So that is a big wild card for us as we move into 2025, depending on the outcome of the election. So we do think instead of it being a resolution post-election, it could actually be a source of volatility for markets simply because we don't quite know what we're going to get in this wonderful box of chocolates.
Well, this has been awesome. Again, Cameron Dawson, the Chief Investment Officer over at NewEdge Wealth, always bringing the slides, always helping us break down different investment strategies and themes. Cameron, thanks again for hopping on Benzinga's Pre-Market Prep with us today.
Thanks for having me.
Of course. All right, guys, that was Cameron Dawson, of course, one of our favorite guests here on Pre-Market Prep. Oops, here, Joel, let me throw that back on.
So prepared. She's always got the slides, very prepared and so well spoken. Yeah, you learn a lot from Cameron.
All right, you got decoupling here. The bonds continue lower and S&Ps continue higher, folks. Tuesday never happened. We are right back. All-time closing high comes in at 58.1450. All-time high 58.30. All is good here in Stockland.
I mean, and all is bad in bond land. So it's a funny market here where, everybody was calling for a big bond rally coming, except for Jim Tassone. I'm giving him credit here once again because there wasn't a lot of people calling for TLT to go down when the Fed just all of a sudden raised or lowered 50 basis points. There wasn't a lot of people coming out that day and saying, oh, yeah, this is bad with the TLT. Jim was, and there's, and maybe, there was a couple other people who were doing it, but wow, TLT is still leaking here. Again, remember one thing is bonds do compete with stocks for capital to a certain extent too. And if we do think we're going to start going into this next rip roaring bull market here, bonds might not be the way to play it. And the way to play it is still the same stocks. And that's why I'm going to continue with the same theme. I think we go out 2024 the same way we came in, with AI leading the charge. And that is what is happening here this morning. If you're looking at what is moving here this morning, it is tech, and more tech. We've got NVIDIA trading up, over almost 2%. All your chips are ripping. Micron, Applied Materials, Qualcomm, even Intel up 1.89% here. Tesla's bouncing back up 2% here. Netflix, Google, Microsoft, Amazon. It's green across the board in tech land. IWM going up too. What is not performing well is what you would think would not perform well here this morning is consumer staples and utilities, both trading down here this morning because those stocks trade with bonds more than they trade with stocks.
All right, before we wrap, let's get to some ratings real quick. I came in this morning and I was like, oh, look, Morgan Stanley got upgraded. Dennis said, Aaron, that doesn't matter. Dennis, why does that not matter?
It does now.
Yeah, it sure does now.
Is ripping. Yeah. So
HSBC came in with a, let me get the exact thing, and then Dennis, I'll let you explain why you told me I was being silly this morning. So HSBC upgrades Morgan Stanley to buy, announces an $118 price target. Dennis, why?
I've traded ratings for years. You typically don't see a lot of outperformance when you were trading, when you get a bank rating, meaning that a bank is actually upgraded or downgraded. And to my point, that is exactly a counter to, you say it was up 1.94%. Wow, I wish I would have bought that on that rating. This is 100% the jobs number, because you want to know something? Bank of America's up 1.81%. It didn't get an upgrade today. Morgan Stanley up 1.94%. So you only got 0.1%. Citigroup up 1.73%. It didn't get an upgrade today, but Morgan Stanley only up 0.2% more. Upgrades and downgrades are not worth much when they're happening to banks. It's just the way it is. I don't know why, but I've traded ratings for years. When I see a bank upgrade, it's like, it's big, maybe 0.5%, maybe 1%. You don't see 3, 4, 5% movers. What really moves is obviously, when you get a smaller name that isn't widely followed, those can really move. You see 5, 10% moves on ratings if it's in a smaller name that's not widely followed. Even if you get into a big name that is widely followed, that can help too. Like if you get like somebody coming out and, like an NVIDIA, or if somebody was to upgrade Tesla or something, it would really move on that. And then it's sentiment going into the rating. Was the stock, really flying high and this is an analyst that's just chasing price? Or is this a bold contrarian call and this stock has been in the gutter and an analyst is coming out to give it a vote of confidence? That's worth more than the chase rating. So, you've got to analyze, a rating is not a rating. They're not all the same. It's not like, an upgrade is an upgrade and it moves up 5% or 2% because it's upgraded. It's altogether different. You have to take it within context.
Well, either way, I mean, like you said, the banks are moving higher off of this, off of the data. Bank of America back getting right above to $40 here. I did see
who's selling up here though?
Well, okay, but here's the flip side is Warren has slowed down his selling of Bank of America now. I think the latest sale was only like $260 million worth. It was previously like $700 million worth a month. So he might be, his selling might be slowing down a little bit here on Bank of America.
What if he gets under 10%?
Well, then he won't see it every day. Yep. And that's a good point too. So as soon as he falls under 10%, you won't see it coming out every couple days. You'll not see it until he actually has to put it out on the quarterly. So the 45-day on the 13F.
Mm-hmm.
So that's one major consideration, Joel, and it's a fantastic point. So at a certain point in time, we'll stop seeing the selling in Bank of America, but doesn't necessarily mean it stops. Where is he, AB? Do we know what he owns? So when you own over 10%,
10.2%.
he's 10.2. So at a certain point in time, you're going to see the Warren Buffett selling stop on your regular reporting every couple of days. But that doesn't necessarily mean it stopped. We'd have to then wait for the 13F. So once he falls under 10%, you don't have to report, in that 48-hour period.
He's up to a let's see, what is it in Oxy right now?
Oh, he's
He
like
is up to
29, 30% of Oxy. It's coming back for him, though, right now. The oil's on the comeback trail right now. I don't know if this is a turnaround.
He might have been in there buying. Maybe he just backed his levels off a little bit. Maybe it was him at
he hasn't bought, because we would see, because he's way over, so we would see it. So he has not been buying.
Well,
he's full. I called this, and I do make good calls, bad calls. I've played Oxy really well off Warren, because I made it multiple times, 57 to 62, 57 to 60. Probably did a half a dozen times, all successfully. Sold my last stock at 63. It came down to like the 60, and I'm like, okay, I'm waiting for that Warren buy. Then it came down to 59. I'm waiting for that Warren buy. It's not coming. 58, waiting for that Warren buy. Wait for the filing. I will strike if Warren buys. Not coming. I'm like, oh my God, he's full. Oh my goodness, he's full. We said it on the show. Not for me. People saying, "Oh, I buy 57, 58," but he stopped buying. That's the
and
tell.
you stopped buying, and you stopped buying too.
I stopped. I'm the one that was holding it up with my little position sizing. Definitely not Denny holding it up. I'm not the whale. I'll tell you that. I'm advantaged as a trader because I'm small and diversified. That is such a huge edge. It's such an underrated edge. I know AB wants to close the show. It's such an underrated edge to be small, because you can get in and out quickly. You're a whale like Buffett. It takes you months to sell Bank America. It takes you months to buy Oxy. That's a disadvantage. It's an advantage to be small. You can get in and out. But when you see, an investor that's nonstop buying at a certain level, and all of a sudden they stop buying, that means your floor, your protection, your Warren Buffett put is gone. If you were leaning on 57, that's a sign that, hey, maybe I should sit this one out. And I set this one out correctly.
I was just going to say, it feels like, Warren's been selling so much Bank of America. He's been buying so much Oxy. But if you look at the portfolio, I just had it pulled up. He owns a lot more Bank of America still than he does Oxy. So Bank of America comprises 10% of Berkshire's portfolio, whereas Oxy, even after all his ads, only makes up 4.5% of his portfolio. So about $14 billion worth of Oxy and $30 billion worth of Bank of America still.
So I got to correct you here, AB. When you said the 10.2, we were talking of Buffett's portfolio, because Bank of America, he has to report if he's 10% ownership of the company itself. So how much is that? What you were giving us the 10.2 number? Were you giving us that's Berkshire's? Because that doesn't matter. What matters is
I understand. His stake in Bank of America's company is 10.2%. It comprises 10% of his portfolio. So it's about 10,
so it's just coincidental.
It's just coincidental. That's about 10%.
Just making sure.
Yep.
Okay.
Yep. All right.
I thought you might have understood my question. So
no. I hear
crazy coincidence there. Okay,
yeah,
thanks.
It's 10% on both. All right, well, that will be a wrap on pre-market prep for us today. A wrap for us on the week. It's been a fun week. We had I was out Tuesday after the Lions game. Joel was out yesterday, but we made it through it. Joel, who do we got coming on with us on Monday?
We're going to go back-to-back CIOs for you. We're going to bring on Jeremy Schwartz from Wisdom Tree.
Nice.
So high-level guest here on PMP. Here we go. We saw that 5,800 right back from where we started from the week. All-time closing high is what I'll be taking a look at today, and that's 58.14 and a quarter. So let's see if we can get that number and end the week on a high note.
Beautiful. All right, guys, smash the like if you have not already. We, of course, do have live trading with Ryan Faluna and crew starting up right after this. Do not go anywhere. With that, we'll see you guys on Monday. Stay green and have a great weekend.